What is up, everyone? Good morning, good afternoon, good evening. I am your host, Charlie Shrem, and you're listening and watching another amazing episode of Untold Stories, where together you and I, our guests and our family and friends, hopefully you guys are listening to this like in your car and you put it, play it up on your Alexas, on whatever. If you own I've never heard of like a bar or nightclub yet playing podcasts in the background, but that could be really cool if you do. If you are like one of those owners, thank you for playing the show. Thank you guys for listening. I love it. There's a lot of really cool things that are being built in our industry right now. Really, 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 really cool things. And I told you guys that bear markets bear the fruit. Bear markets are the time when we have the coolest things being built and we get to see kind of together at least. But when the bull markets come, we get to go back and look at which ones, we talk to and what they're doing now. And it's kind of a lot of fun to see the fruit that our industry has been bearing. And not only that, we've been like attracting companies that were doing a lot of other things. And now they're joining our industry. They're doing something, whether it's like Web3 or using blockchain technology. Someone told me yesterday, almost every financial transaction, almost every data transaction, almost anything that moves over like a future version of what we see as the internet could potentially be on some sort of blockchain rail. Uh, I'm really excited to introduce my guests today, Geoff Thompson and Sanjay Raghavan. Thank you guys so much for coming on Untold Stories today.
Thank you.
Thank you for having us.
You lead the legal affairs at Roofstock. My listeners have definitely heard of the company before. You guys are an online marketplace for investing in leased single-family home rentals in a transparent and low-friction way. Kind of one of the first companies to do that, to allow people to purchase like fractional ownership in rental properties. And I think from 2020 to 2022, we saw a huge change in like the not just the values of real estate, but like who has been owning real estate. And we've been waiting to see where the blockchain involvement will kind of be for the real estate world. And Sanjay, you're the head of Web3 Initiatives at Roofstock. You were part of Wharton School of Cyber Blockchain Accelerator, and you did a lot of really cool things there, guys. Uh, I'm really it's interesting because we're going to be talking about you know cryptos, but also taking potential like legal documents or properties and different type of like revenue sharing token type mechanisms and putting it into an NFT. So it's great that we have, the head of the Web3 initiatives, but also the head of legal affairs, because you almost nowadays, Geoff, would you agree? Like you almost nowadays need to have an in-house, someone like you who's on the ball, who knows everything when it comes to corporate and finance law, especially for cryptos. Not forget the real estate world on its own, but for when it comes to cryptocurrencies and things like that.
Absolutely. And I was, as you said, previously general counsel at the company, and earlier this year shifted over to co-lead the blockchain initiative with Sanjay. And this year has been 9 solid months of legal work. There's just no way around it. If you're trying to bridge the gap between something that exists in the real world and has been done a certain way for generations, and the blockchain technology, which has all of the promise that we know about. We're big believers in that, but the legal infrastructure is just not in place. So when you talk about something like wanting to represent ownership of real property on a blockchain, what does that even mean? Right? The deed isn't going to magically appear on chain. The deed still is going to be recorded at the county recorder's office until at some point in the future the laws change, and we can think about having everything fully online on chain. Right now, there's a tremendous amount of legal work that's needed to even conceptualize the solutions in the space.
We're talking about like the handshake between the on-chain and off-chain world, and no one has really figured that out. I mean, there's kind of bankruptcy court now going through with some of these Celsius and Voyager, trying to figure out, you know, how that all works. But how have you made that connection?
One step at a time. There are 17 different aspects of any item that we're thinking about that have to be considered, from commercial law, bankruptcy law, securities law, tax law, and a huge part of our job, and my job in particular, is finding the right lawyers who have the right expertise in that particular area. What we're trying to do is reduce the real estate transactions to a single click, basically using blockchain. So it's like buying or selling an NFT on an OpenSea or your other favorite NFT marketplace. And we're there. It's, we're going to be able to provide an experience to the user where they can do their diligence online. The buyer can has all of the information that the seller has about the property, and that transaction can literally be transacted instantaneously through the blockchain. And we're putting a smart contract in the middle of that. So instead of having this constellation of players from the traditional real estate space that we all know, if you've purchased a home and you have, you realize as you get into it, oh, there's someone else now at the table. Now there's a third.
Sure.
There's title, escrow, notary, appraiser, inspector, and then suddenly you have 12 different parties who are all taking fees. The magic of blockchain is to be able to remove a lot of those intermediary layers. Not all of them in the real world case. It's not, we're not that pure at the moment, but we can abstract away a lot of that stuff. Make sure all of the inspections and everything have been done
Sure.
before the property's listed, and then at the time of transaction, it's literally one click.
I mean, you're talking about an industry that when you're buying and selling a home, there's like a 6 to 10% spread, between what if you're selling something, if you're selling a property, like what you're actually getting. This is a huge industry ripe for disruption. What's kind of like the background about Roofstock? How did the company get started, and what did it do as it now rolls out a whole Web3 interface?
The company formed in 2015 with the single goal of just radically simplifying how single family rental properties are bought and sold. And the first phase of that was just figuring out how people can purchase properties remotely. Because traditionally, this is by the way, single family rentals are $4 trillion and there's about 20 million units. So it's a very large asset class. But traditionally, people have been buying homes within a 200-mile radius of where they live, because then they can visit the property, they can hire contractors, oversee the work, find the right property management, boots on the ground, all of that stuff, right? So the first phase of kind of Roofstock trying to figure out how to make it simpler for people to buy real estate was to just create more transparency in the process so people can feel comfortable about getting on a computer, doing their diligence, clicking a button to initiate the process of purchasing a home remotely. So you could be living in San Francisco and purchasing a home in Atlanta or Indianapolis. But even though that process in the front end was largely simplified, the process in the back end was still the same, right? You had to have your seller's agent, buyer's agent, title, escrow. None of those processes changed. So what we did in the first few years was the process of finding a home, diligencing a home, making an offer. That was all shortened from the complexity of not, you didn't have to fly to a remote location to look at properties and hire an agent, local agent there, and all that stuff. So we simplified that process quite a bit, but it still took 2 or 3 weeks to actually close the deal. And if you had financing, it took even longer to close the deal, right? So that was the initial kind of phase of Roofstock. With Web3, we wanted to not just reduce the front end load, but also the time and effort it takes to close the property. Literally, as Geoff was pointing out, we wanted that to be a one-click transaction where you went to your favorite NFT marketplace, you found the asset you wanted, and you clicked a button, you signed your wallet, you transferred ETH or USDC, and the property was yours. So that's the kind of innovation we've now created in this last year.
And now you're kind of looking to advance that into a. Did you guys create a new token standard? Is ERC 721A?
No, so the ERC 721A is the Azuki standard that already exists. It's a lower gas fee standard. We are using that for a membership token that's going to be a soul-bound token, and that's how you start your journey with Roofstock onChain. Okay. Once you get that token, we're going to offer a free real estate course, and then after that, once you know how to look at underwriting real estate properties and you're comfortable with that process, then you can start going to our marketplace and buying properties and managing them. But the main token we're creating, the home on-chain token, that's also an ERC 721 token. We've just made a few minor modifications to create a standard where allow listed people, so people can come and get allow listed, and once they're allow listed, they can go and purchase the asset.
This is very cool and it's very unique. So essentially, it's not like you just show up to a marketplace and you have the ability to purchase a token that represents a share of a property or the whole property, but rather you're almost like hybrid onboarding people and almost getting them comfortable with, hey, what is a token and what does a token do? Because I'm sure you have a lot of people who've never interfaced with like a crypto token before. And then, so essentially, if I'm and then it holds the KYC status. So that's very important too, because it allows you to create like a permissioned walled garden, which is very important, as it relates, especially this morning. Like, right, Geoff, we saw I think this morning we saw just a thing about the chairman of the SEC say that, Bitcoin and Ether should be regulated by the CFTC and then all securities tokens, the SEC. So there's going to be a lot of like requirements when it comes to the ledger and who can own what and things like that. So it holds your KYC status, but then it whitelists you, enabling you to like be part of liquidity pools and what other type of things. That's so cool.
Yeah, so that's it. I mean, we on the standard itself, we started with 721, or actually we started elsewhere, and then decided no, we want to be as close to as possible to the existing standards and fit ourselves into the existing network. We do have some education on both sides. Traditional real estate investors are usually happy with the way things work, or mildly inconvenienced at the most. They don't necessarily see blockchain in a positive light, and if you ask them to sign in with their wallet, they don't even know what you mean. And then on the other side, the crypto natives are they only want to see wallet. They don't want to deal with email addresses, or they want to stay anon. And both sides, we have to say, we're going to ask you to move a little bit in another direction. We do have to have KYC. That's just the law of the land. I mean, this is, in our case, the way we've set it up. You're owning, when you purchase that token, it represents, or it signifies ownership of an LLC, which owns the property itself. So the property has been titled in the LLC. So that means you are the owner of an LLC. We have to know who you are, but the way that we've done that is really tried to move that entire process into a quick onboarding. We get your core information, and then you're whitelisted or allow listed, and the token itself, if it's if this transaction is being conducted outside of our system on another NFT marketplace, the token will actually call to our database and confirm that you've been allow listed and properly onboarded before the transaction will complete. So that's how we allow. That's how we comply with law, making sure that. Yeah. So we know. So basically, we're using that transfer function that was already part of the ERC 721 standard, and just expanding its use case a little bit, so that we can get the materials in that we need.
So Charlie, like you mentioned, it's creating a permissioned architecture, but on top of a permissionless network, right? Because we're still using Ethereum, which is permissionless, trustless, and decentralized. And we're just tweaking it a little bit so that before a transfer can take place, the smart contract makes a call to our membership token, and the KYC standard, if you're KYC, that's stored on your membership token, which is a soul-bound token. So it's in your wallet. It cannot be transferred out. It makes a call. It looks at your wallet, checks the soul-bound token, sees if you're KYC'd, and then it'll allow the transfer to take place. So that's the innovation we've added on the standard, Open Zeppelin ERC 721 implementation.
I don't know if you, actually, side note about Open Zeppelin, the creator of that auditing company was also one of the founders of the Bitcoin Foundation with me. So it's another side note. It's a really cool situation.
Yeah, you're one of the OGs. I know you way back you were part of the Bitcoin Foundation and all that. So, you kind of started this revolution, I guess.
That's why I get so excited when I talk to people who are really pushing that innovation forward. But also, like, I got a great review last night. Someone sent me a message and he said, and actually, I'll read it to you because the YouTube was really nice and this review was really nice. But then I'll lead it into my question because I'm always talking about the show being just more about the why, like why we're doing these things and like the second order effects and how it's going to really change the world. And I have a really good point for you. But someone left a review. His name is Shaul on YouTube, and he said, uh, he goes, I first heard of and was inspired about Bitcoin from you. Your name is synonymous with Bitcoin, and how I first heard it was inspired. Went down the rabbit hole, and now I manage quant fund trading arbitrage globally on hundreds of exchanges. I love you. Keep it philosophical and continue to focus on decentralization. People are losing sight. Thank you for the content and keep it up. And I do. I was like, a little tear came to my eye last night when I read that because there's a lot of people who kind of do lose sight of the second order effects. But what you're doing here is you're removing the disenfranchisement that has been around for since real estate ownership was a thing. It's not just about being a member of a class that can't walk into a bank and get financing. I'm talking about you not being able to buy real estate with cash in neighborhoods because those neighborhoods don't want you for whatever reason. I grew up in these very similar type of neighborhoods. So you're keeping the core of what's needed. KYC, due diligence, credit checking, stuff like that, background checking and things like that. But you're removing like the stuff of like, what's your sexual orientation or what's the color of your skin or all these other things. And I really love that.
That's right. I mean, we love that too. That keeps us going. As people say with DeFi, it offers the opportunity for everyone to participate in the credit ecosystem without all of the things that you just said. Any type of discrimination or being in a prejudice situation based on your background. It's the exact same here, right? We're moving that those items don't even come up in this transaction. You as a seller don't get to decline to sell to an individual because of who they are. This is all, and that's kind of the point, is to make this. The Rootstock mission from the beginning was to make real estate more accessible, and this is really the next implementation of that.
Exactly, and if you look at it from the KYC, we're not storing all the information pertaining to the person on the soulbound token. It's just a flag that says, your KYC.
Right.
When you go to an OpenSea, you're still anonymously connecting your wallet to OpenSea, so nobody knows who you are. It's just the implementation that, in the smart contract, we make a call to see, is that flag set to true or not? And if it is true, then you can go ahead and make this purchase. And so that's all we're looking for. So, we're completely abstracting out anything else. And as it should be, right? It should be inclusive. That's one of the promises of Web3. And we want to try and stay as close as possible to those founding principles, core principles of Web3.
Do you think iterations down the road could include like attributes of a property? So you're looking at like bedrooms. You can get really specific. You can get like the quality of the home. You can get that you can have like how old is your roof? How old are your air conditioning units? Your heating? Like all these different type of things. Because how do we get price discovery with real estate now? I mean, it doesn't exist, right?
That's not even a future thing. That's right now. Like if you go to our collection on OpenSea right now, we have one property listed there. You can see a video walkthrough of that property. But also, there's a link that takes you back to our site, and there's an entire kind of diligence room for that specific property where you can look at the most recent inspection report. You can look at the title, deed, everything pertaining to that property. But also, we have a report of all the rehab that was done on that property, which walks through specifically age of systems and what was replaced and when it was replaced and all that. So we want all of that information to be at your fingertips when you're going to our native marketplace or OpenSea or LooksRare, wherever you're purchasing this property. We want all the information to be available to you, so it's fully transparent. The buyer knows exactly what they're buying. and there's no asymmetry between the seller
That's
and
so
buyer.
cool. Yeah.
Yeah, because that's the biggest issue, right?
Yeah.
When in a traditional real estate purchase process, you don't know what you're buying. That's why you need all these intermediaries in the middle, and you're getting an inspect. There's all these contingencies on an offer. We're taking all the contingencies out because all the information asymmetry is gone. Everyone's looking at the same information.
I want to ask a little bit more, but I was just thinking, Geoff, is this like the end of title insurance and like requiring to like have that checked? Because once a property goes through your process, why would someone in the future ever need to go back and because you've kind of proven the due diligence, right?
Yeah, so we kind of started with that mindset as well, and technically it's true. But what we found in working with about one or two title companies that are really tech forward is they have ways to maintain a title insurance policy even when the LLC interest or the token is transferred between different parties. So
Oh, that's so
if an individual, and we assume, right, this is part of going back to where we started with bridging the gap between the way things are done now and the way things may be done in the future in an ideal state, we still will have title insurance on all of these because we feel like that's just something that real estate investors they're used to having.
yeah.
It's just one of those boxes that have to be checked. Technically, because it's an LLC, and if the title has been cleared early on in the stage at the time of tokenization, then you're right. Theoretically, during the life of that token, title's not changing. And so you wouldn't need to re-up the title insurance, but we have built in a way to do that on a cost-effective basis because we expect that's something that traditional real estate investors are going to look
What
for.
about like property insurance? Can that stay with the property now? Like all these things that traditionally had to go with the homeowner, not the property itself, can they potentially stay now with the property?
Exactly. Yeah, that's part of what we mean by abstracting away all of these things. The title, for example, that's taken care of before you even purchase the home. You don't have to. That's not like an additional line item when you purchase it. And a traditional home closing, you get the HUD statement that has those additional 65 fees that you weren't expecting. There's no such thing here. Everything is taken care of up front. So there's no title. The insurance, or sorry, the title's taken care of. The insurance likewise, the property is insured at all times before you buy it. After you buy it, the insurance policy will be in place for a year. It's prepaid, and then it's your decision if you want to keep that particular insurer or if you want to find a different one. We've set it up again with a tech forward insurer that's you can do all of that with one click, and it's pretty easy. You don't have to spend a lot of time on phones and receiving emails and all that kind of stuff. But if you do have the choice, if you want to choose a different insurance plan, you can do that.
Guys, hot off the press, we've just negotiated with our epic new sponsor, Bing X, over $155 in free new user rewards for each of you. Just check them out and click the link below, and I'll explain to you who these guys are and why they're offering such an amazing award to our Untold Stories listeners. Bing X is a really cool crypto social trading exchange. They offer the usual like futures, spot, derivatives, all the good stuff that you guys like to do, all the cryptos and all the different coins that you want to buy. But they also offer a really cool copy trading service, and then you can see all their traders over the past few years, how they've performed, and you can simply copy their trading. They have over 3 million users, regulatory licenses in Canada, USA, over in Europe, through Lithuania, Australia. They got one of the best ratings by CertiK. So you know they're legitimate, and they're going to be helping us out and offering you guys this amazing deal. Listen, if you click the link below, there's a new user reward and an extra on top special link bonus. You're going to get $155 in USDT. The link has everything in there, and they're even capping your losses up to $10 if you go in there and try to play around with the copy trading. BingX.com, thank you guys so much for sponsoring us. I'm excited to send some more videos and update you guys on their platform. It really looks nice. It's comfortable to use. You feel safe and secure. You get $150, $155 for free, so why not? Go check it out, BingX. Thank you guys. It's great. I've been getting into like this is like really mind-blowing, groundbreaking stuff, not just from like a legal perspective, and I hope you're like writing case studies and you can give it to regulators and show like, hey, this is how we solve consumer protection, KYC, but also be Web3 forward and like do everything on blockchain rails. It's really cool to do that. But also from like a technical perspective with creating modified tokens, there's a lot of like going back to second order effects with liquidity. You're talking about. I want to ask you both about your opinions on real estate investing itself. But just as a follow up to your last answer, I think I forget if it was you, Sanjay or Geoff, who said it was a $4 trillion market. But this is a market that traditionally was very illiquid. Do you think? But at the same time, because it's so illiquid, we've had crazy bull and bear markets in that have traditionally turned people away from real estate investing. Do you think further liquidity will smooth over these lines?
Yeah, so that's a great point you bring up, Charlie, right? Because when you look at, let's say, a $200,000 home in Atlanta, right, and you're the seller, you want to sell this property. Well, you're looking at a 6% sales commission on that sale, so that's $12,000. Then there's potentially some staging rehab work to be done to make it look, to stage it and make it look pretty for the sale. So that's, let's say, another $3,000. Now you're at 15. Closing costs, probably another 1% or so. So you keep adding up these costs little by little, and sure enough, very soon you're close to 10% of the value of the house, right? So as an
It's
asset class,
crazy.
it's really a great asset class to buy and hold because you're getting rental income and the rent goes up year over year, keeping up with inflation. The value of the property over a long period of time, say if you look at a 10-year horizon, the value of the property goes up over a 10-year period, even if there's like blips in the short term. So it's a really great asset class to buy and hold. But as soon as you decide to sell it, it's not so good anymore for
Yeah.
the reasons you mentioned. It's very expensive to sell one of these assets. It's not like going into Robinhood and just selling it. So that's always been part of the reason people buy and hold, and then not a lot of liquidity comes back in terms of people selling and rebalancing their portfolio, going to a different city, buying something else. And with our program, we definitely want to solve a lot of that, right? Because essentially your experience as a seller is listing it on an NFT marketplace, and the buyer is coming in, they're paying the creator royalty fee, which in our case, we're charging 2.5%. And if you're buying it on our native marketplace, the native marketplace fee is 0.5%. So instead of paying 6% in commissions, another percent or so in closing costs and all the other miscellaneous costs, now you've bought it for less than half of a traditional sale process, and it's done instantaneously. You're not waiting 3, 4, 5 weeks, and then if something, all the documents are not in place, the offer sort of gets rescinded, and then you're back offering it all over again in the market. So you take away all that because the smart contract checks to see party A has the token, party B has the money, get these two transferred, you're done with it, right? So literally,
Be a lot faster.
it's like buying an ape or a punk on open seats, no different than that.
And on the liquidity point, that is one of the main challenges that we set out to solve here. We really do want this to be accessible and easy, and dare we say, an enjoyable experience to get into real estate and lower the barriers. And so the way that we envision this working is the tokens can be transferred any time, right? Like you said, if you're paying 10% of the cost of the house in transaction fees, then you're going to want to hold that typically for a couple of years at least to just make that money back. When you bring down the fees, you also bring down the transaction costs, and that will increase the liquidity because these can turn over more frequently.
Now, what if I don't want to sell my property though? But that's a big thing. A lot of people, it's like the opposite. Uh, you have properties that you want to hold on potentially for life or whatever it is, but you want to tap into its liquidity every so often. Is that something that can be done?
We are working on a new DeFi protocol, which we'll be announcing in a few months, which will actually, again, if you look at, we were just talking about how difficult it is to buy and sell real estate. Now, on top of that, if you add financing, don't even get me started there, right?
Yeah.
Because you're basically giving, your entire life history and biodata and your kids' information and everything else to get a loan these days. And you're paying 6% or so, right? The Fannie Mae loans are 5.6 or something in
It's
today's
crazy.
market. In next week, the inflation report is coming out, and the Feds are meeting a couple of weeks after that. And you're, most likely, like the markets went down today in anticipation of another interest rate hike. So, we're probably going to be at like a 6% interest rate. And it's just like people can't afford to buy expensive homes and pay
Yeah.
6% anymore, right? And it takes like weeks, and you're giving your income, your tax, your assets, and everything to the bank, and you go through this process 2 or 3 times before your loan is finalized. We want to make that all really simple here and be able to, just like with Compound or Aave or like a DeFi solution, be able to pledge your NFT and just take a loan against it, because that NFT represents value. Why shouldn't
Yeah,
you
you can,
take some value out of it?
especially if you have like Airbnb properties, you can have revenue sharing tokens. I mean, there's so many different, like if you have something bringing in like, 6 or 7% after all of the costs and everything, you could potentially
Mhm.
share that with other people. There's a lot of,
Mhm.
and then that's real yield. I mean, people talk about how do we get yield on top of a blockchain? Where are we
Right.
going to get these percentages? That this is how we get the yield. You cut out all the middlemen. But to your point, I know it's, let's go back to 2008, 2009. Uh, I was too young to get like a mortgage back then, but a lot of people told me that it was very easy to get a home loan. It was very easy. You can get 10 mortgages. They were giving them away like candy. Maybe this is exaggerated, but it was a lot easier. And then we had this crazy, the great financial crisis. We had this crazy subprime mortgage lending thing. And that made they made the regulations and rules a lot more strict about how to actually, who they made the rules and regulations a lot more strict when it comes to to Fannie Mae and Freddie. Is it Freddie Mac and Fannie Mae, right?
Mhm.
Those they made what those government organizations can insure. So it made this the mortgage brokers have to up their requirements, because if they can't insure the mortgages that they're getting to you from the government, then they're not going to give you these mortgages. But I guess the point I'm getting at is that no one made it easier for companies like yourself to originate more loans to people that would be normally disenfranchised. So finally, like 10 years later, we're catching up.
We do have line of sight to a solution to that exact problem, which is, yeah, anyone who's recently gone through the process has probably seen 400 pages
It's
of
traumatic.
disclosures and documents to countersign,
Yeah,
and most of that is actually driven by the financing, not by the underlying home transaction. And so what we envision for this product is an asset based loan instead of a loan that's based on someone's personal credit. So this would act like other DeFi protocols or even
yeah,
the NFT lending, where you pledge your token, and that's all that you need to do. You don't need to then go through months of personal underwriting and have people examining your credit score and your debt to income ratio and all of that. You just simply pledge the token. If you don't pay the loan, then the token can be
yeah,
foreclosed. But the idea is, let's radically simplify the way that the financing process works, so that you could even theoretically sell your token with a loan on it to another person. I can sell my levered token to
sure.
you, and that makes financial sense, because it's the loan rate isn't based on me personally, it's based on the asset. So if I own the asset or you own the asset, we both get the same rate.
Exactly, and that's a really powerful thing, right? Because if you think about how home loans work today, what you're pledging as collateral is the title to your property, right? If you don't pay, the bank can foreclose your property and take control of it. But still, the process of getting a loan involves asking Charlie, "Hey, how much did you make this year? How much did you make last year? How much? Show me your tax returns, show me your bank statement, show me your retirement accounts, and show me your everything else." And we, if you've got this asset that has value, and it's the example I'd like to think of is, Bitcoin today is $20,000, but last year, it was a lot more. You went and pledged your Bitcoin and you got whatever, 30% of the value against it, or, whatever each lender was willing to give you in a DeFi market. They didn't ask you how much money you're making and are you a wealthy person? Are you a poor person? Right? It shouldn't matter because you've got this asset as collateral that has value. And if you don't pay, I can foreclose on that collateral, right? The same thing should be happening here because you have this property that's worth whatever, a couple of $100,000. If you don't pay, I can seize that collateral. I can, sell that NFT on an NFT marketplace and reclaim my principal and accrued interest. Why should I have to ask you all these other questions, right?
That's the whole point. You're talking about
that process. Yeah.
You're talking about like moving right now the ball is, it's not whether or not the property you have enough like loan to value. The question is, do you as a person have the ability to repay this full amount over the course of the 15 or 30 years, regardless of the property or not? And so like, that's really what's happening there in the current day. So you could be someone who owns multiple properties, 1 year makes $1 million, 1 year makes $0. It's going to be very difficult for you. You have to have consistent like paychecks and stuff like that, proving that you can. That's what the problem is. But I get why.
Exactly. I understand. That's exactly the problem. Yeah.
I understand why that problem exists, because on the other side, I don't do it anymore because of this exact problem. I used to lend against real estate, private hard money lending. And I'm in a 2.5 year foreclosure right now because there's like 6 appeals that a borrower can go through. So I don't know how you solve that problem. I guess by putting the property on chain, you're making the due diligence, the seizure a lot easier. Like you said, because you could just sell Bitcoin. Now you can sell the property. But there's like a lot there when it comes to like.
Yeah, there is. I mean, you put your finger on it. That is part of the technical legal analysis that we've done, is how can you actually transfer title to that token such that a lender is able to take possession of that and foreclose on it and resell it if they want to do that. In our case, obviously consumer protection is important here.
Of course.
We're not trying to, you can't just like take someone's home away on the blockchain.
Yeah.
That's not a thing, right? We're not, and that's not what we're proposing.
It's not what happened to me either. I'm not like pushing a family out. It's
right. Yeah, there's bad faith and all of that.
A lot of bad faith out there, unfortunately, in the lending world. Most people don't realize, but you as a person going into a bank and being in good faith is the minority.
I mean, it's a tricky business, and the way that we're kind of thinking of it, first of all, in our case, these are rental properties. These are not sold for purposes of owner occupants. So that changes the analysis significantly, because when we get into lending, these will be commercial loans. These are not mortgage loans. They're not consumer loans. They're loans made to an LLC for a business purpose. So that helps us with the analysis and the consumer protection part of it. A lender, if you've pledged your token to the lender will have the right to take that token, and part of that means that they can resell that token if you don't pay. And then, of course, you get repaid the amount that you're, that's left over after the sale.
Sure.
So again, we're not creating any kind of system where this is dramatically stacked against the borrowers. You always will get repaid whatever's left. But the idea is, if there's a tenant in place, you have to respect the lease. So the token can be transferred, but the tenant isn't going to be disturbed, because it's still, as long as the tenant's paying rent, they're entitled to be in the property, and no one's going to try to push them out. So it's kind of in our situation, limiting ourselves to the rental property space, at least initially. That really does help with a lot of these issues, and it allows us to consolidate this and do it faster on chain.
Do you have to care about the ETH merge happening next week? Does it, as a company, building technology on top of Ethereum, is that like a non-event for you?
We all care about it very much.
No, of course, but like your tokens are not going to be cloned where people have to choose
No, I mean, yes, our lawyers have reminded us we need to have some language, some disclosure in our terms and conditions about, if something happens. But in our case, because there's a real world asset,
Sure.
at the end of the day, if somehow the block doesn't get updated correctly, or it's cloned and there's uncertain title on chain, at the end of the day, there still is a real world LLC and property. And because we've gone through that process we talked about of understanding who that ultimate beneficial owner is, we know who the owner should be. So if something were to go wrong with the blockchain, no one's going to lose their home tokens from us, because we have the ability to kind of decide who the actual owner is based on the records that we have.
Actually, on that note, another kind of interesting thing about this token is because it can only be transferred to allow listed parties, your token cannot be taken away from you in a phishing scam, for example, right? You're not going to connect your MetaMask wallet to some site posing to be Roofstock, and suddenly you wake up one day to see your $200,000 property gone, right? You're not going to have that situation because, again, only KYC parties can these assets can only be transferred amongst the KYC parties, and also because we keep a linkage of so anytime this asset sells on the blockchain, we're listening to the blockchain to see if a sale has happened, and when it has happened, we get the new wallet address. Again, we've already KYC'd the wallet, so we know who that belongs to, and then we can update our books and records to say, okay, now ownership has changed from Charlie to Geoff, right? So at all times, we know who's the owner of the underlying asset, because that's also required by law. We need to know who they are and we need to report that. But other than that, again, as we said earlier, there's liquidity because if the seller can decide they want to sell it with a price in ETH, price in USDC on this marketplace, that marketplace, it really doesn't matter to us. And we wanted that flexibility where, there's more control, as a token holder, you should have control on which NFT marketplace you want to sell it at, right? So we're not trying to restrict it to only a Roofstock marketplace, for example, right? So we want to stay true to all the Web3 elements here, but there are some benefits of this KYC process. So, you cannot lose your token to a phishing scam or something like that.
It's really cool too, because in traditionally joint ventures and partnerships with companies is like a very onerous process. There's if you guys wanted to work with one of your competitors, or you wanted to like grow your company by partnerships and things like that, which I'm a big fan of, it's very difficult. But now, like, if you take in the back of my mind, we had a past guest who runs a company called Syndicate, and Syndicate is like it turns any wallet into like a Web3 investment club, or like an investment collective DAO that allows folks to deposit money and create these like governance, voting, investing clubs where it's like going all together and everyone's making decisions together and where the money's being allocated off chain and on chain. But by you doing something on chain and they're on chain, the work is already there for like how you guys can work together and grow each other's businesses without the need for like all this other stuff.
I mean, you bring up one of the key points of Web3, right? If, for example, our soulbound token is going to be on somebody's Ethereum wallet, and if that says, we've gone through a KYC process and that flag is set to yes, somebody else that this individual is interacting with that also requires a KYC can also just check their token status to see if this person has been KYC'd and allow, a transaction to proceed, right? That kind of interaction. In the past, like you go to Bank of America, they will KYC you. You go to Wells Fargo next, they'll KYC you again. You go to Chase, they're going to do it again. Right? There's benefits of Web3 where you can share a lot of these types of things, which creates interesting partnership opportunities. The other thing I wanted to point out was we actually, all of the analysis we've done here are standard. Our smart contracts actually on GitHub. The source code is there for anybody to see and replicate and do what we've done. We'll also be publishing a white paper on how we're doing this, as well as like LLC form agreements and other things we've created to support the structure.
Oh, wow.
So if anybody else wants to either replicate this for single family rental properties or any other real world assets, right? Like they can look at how we've done the implementation and replicate, fork it and create their own. And we want to encourage that because in Web3, we're not trying to become the only online, seller of something, right? We don't want to be the Amazon or the eBay. We think that, 100 companies need to be doing the same thing. And when they do, then we all prosper together. So we also want to try to stay true to those principles of, give the power back to as many people as you can and, try to kind of elevate the ecosystem as a whole. So that's another thing we're looking
I
at.
love that. Geoff, is there anything else that I missed as well?
No, I would just close on that point because you brought it up earlier, and Sanjay just alluded to it. But we do see ourselves as advancing the blockchain and crypto space as a whole. This is not just the the Roofstock project. We are opening this up. We're going to probably open up annotated versions of our documents explaining what's there and why, and with an open invitation for people to fork them and use them and do what they want. I think everyone in this space needs to be thinking about the ecosystem as a whole and not just what they're doing. And that's what we're trying to do. So talking to other participants in the market, but also with the legislators and policymakers, we do think that there is a very valid use case for blockchain in real world assets. People have been trying to crack the code for a while. And we're, we do have line of sight to something that's new and different, and we're going to share it. And we want the ecosystem to grow, and we'll be part of it.
It's so cool. I know how this can be directly applied. I'm working on with a group of folks how this can be applied to a total different section of like the film industry and lending in that respect. But we'll save that for another day. Thank you guys for coming on Untold Stories. I really appreciate it.
It's a pleasure.
Thank you. It's a pleasure.